All right, hello, good morning, good evening, and good night. I hope you guys are doing absolutely fantastic because in today's video, what we're going to be doing, as you can see, we're racing through here. We are going to be talking about KLIP, Kraneshares China Internet and Covered Call Strategy ETF. More specifically, we're talking about their recent dividend, 67-cent dividend that they did announce for the month of November here. And what I want you guys to do is obviously grab your hot chocolate. Today was a cold day out here in Canada, so if you're by the fireplace, grab some hot chocolate, curl up with some nice socks, and let's get into this video. So, by the way, absolutely crushed it on the subscribers, guys. Thank you to everyone who subscribed. Last video is doing good, and we're over that 3,450 subscriber mark. Just want to point that out there. Thank you to everyone who subscribed, liked, and helped with the channel. So, we're talking about KLIP. So, KLIP recently paid out a 67-cent dividend, and I actually made a previous video on KLIP, just kind of estimating what I thought the dividend was going to be. I thought the dividend was going to be closer to 75 cents. I thought it was definitely going to be above the recent dividend of 69 cents, roughly 70 cents, just due to the fact that KLIP has been appreciating over the past month or so. It's had a great run up with its underlying asset being KWEB from about $56 or so all the way up to about $28. But to my surprise, I was actually wrong. So KLIP actually came in at 67, roughly 68 cents for their dividend, which honestly, you know what, is still a great dividend, but at the same time, I was wondering why it went down. Now, just looking at their past kind of track record of KLIP stock price, obviously KLIP has been in a downtrend for a very long time, kind of coming out of that right now with a little stagnant or even a small uptrend here, which is nice to see. But KLIP share price, as the share price has trended downwards, we've seen smaller and smaller dividends coming from KLIP. This might just be to the fact that they have less overall kind of total net worth to invest into KWEB for their covered calls. They do sell covered calls on KWEB, so as KWEB appreciates, I actually have this here. So selling covered calls means you get paid a lot of extra money as you hold the stock in exchange for being obligated to sell at a certain price if it becomes too highly valued. So if KWEB, the underlying stock that KLIP writes or sells these covered calls at, if it gets too high, KLIP is obligated to sell KWEB at certain prices, collect premiums, but is then limited to the upside. And that's what we might have actually seen today, just due to the fact that KLIP was down negative 0.2%, 0.02%, while KWEB was actually up closer to a 1% marker. So that's something to keep in mind too. But yeah, so KLIP paid out a dividend of 68 cents. We're going to call it 68 cents. And part of that, I feel, is due to the fact that we've seen a decline in the stock price. And as the stock price kind of drops, we're seeing smaller and smaller dividends. So if the stock price continues to drop further beyond this point here, we are going to see smaller dividends than this. But I do believe if KLIP share price is able to recover, then we are going to see some dividends like we've seen in the past, dollar dividends, 80-cent dividends, and beyond. Now, with this 67-cent dividend, what does that mean for my portfolio? Well, I actually hold 145 shares of KLIP, if you guys didn't know from previous videos, and that is going to give me about $98.22. Unfortunately, we crossed that $100 marker with the last dividend of KLIP, but we're unable to sustain it due to the slight dividend drop that we've seen in KLIP. So the $100 marker will still have to wait. We are at $98.22 for the month of November for KLIP, which is still very good, obviously. Now, one thing I do want to mention, as I said, you get paid for holding the underlying stock when you're selling covered calls, but you do potentially have to sell at a certain price if the price becomes too high. Now, on the other side, how could KLIP lose money with this selling covered call strategy on KWEB? They could lose money if the stock drops more than the premium received. So they receive a premium for holding KWEB. They hold shares of KWEB, which is KWEB is the CSI China Internet ETF. They hold a bunch of major Chinese internet companies. And so KLIP holds shares of KWEB, and when KWEB depreciates more than the premium received from holding and selling the calls, as you can see here, premium received from selling the call options, the cover call strategy begins to lose money just due to the fact that they aren't able to outpace that loss. Now, KLIP I hold KLIP for the long term. I'm not necessarily looking to sell my shares. I actually heard of a few people selling their shares just before the ex-dividend date, so selling them at roughly about $17.38, but I will continue to hold. I mentioned in the last video, I forgot to mention at least, my average share price on KLIP has dropped now to about $18.57 if I am aware from last time. Yeah, $18.57 right there. So that is my current average share price for 145 shares of KLIP. I just wanted to announce this dividend to you guys. If you guys weren't aware, 68 cents. So if you are holding shares of KLIP, you will be receiving that in your dividend portfolio if you bought before yesterday or today. So I hope you guys did enjoy this video, heard the news on KLIP. Unfortunately, it wasn't as big as we were expecting, but that's how it goes sometimes when you invest. There's ups, there's downs, but we're going to keep pushing forward. So I hope you guys did enjoy this video. Please do subscribe if you haven't yet done so. We're up to 3,452 subscribers. Let's bump that up if we can. I hope you guys did enjoy this video, and I will see you guys in the next one.